Will there be 3 or even possibly 4 rate hikes in 2022? What impact will this have on the housing market and interest rates as we kick off the new year? Make sure to stick around until the end where we discuss what rates may look like by the time we start 2023. Hello and welcome to the January 11th Taco Tuesday edition of Ask the Lender. This is your go-to place for up-to-date information packaged in a shell of goodness. Do me a favor and subscribe to my channel and click that bell right there to get notified when I share more helpful content just like this. Economists and former Fed officials are increasingly raising concerns that the Fed is behind the curve on inflation. It doesn't take a rocket scientist to figure out that the cost of everything has skyrocketed since Biden took office over 1 year ago. Inflation has soared to the highest levels in 4 decades, and on Wednesday, the government is expected to report that the consumer prices jumped 7.1% over the past 12 months. Now, this is up from November's 6.8% annual increase. I've even had to remove bacon from my grocery list as it has jumped over $2 a pack in just 1 year. And you are also probably feeling the pain at the pump as well. Federal Reserve Chair Jerome Powell, who is set to be confirmed today, January 11th, acknowledged in remarks that high inflation is taking a toll on American families. During his hearing today, he is sure to face tough questions on this subject. Powell's nomination is likely to be approved by the Senate with bipartisan support, but members of Congress are sure to interrogate Powell on whether the Fed can successfully take steps to rein in inflation without slowing the economy so much that it falls into a recession. At its last meeting in December, Powell said that the central bank is rapidly accelerating its efforts to tighten credit with the goal of reining in inflation. The Fed will stop buying billions of dollars of bonds in March, but hey, this is up several months ahead of schedule of its previously announced goal of doing so in June of this year. Fed officials now expect to hike short-term interest rate 3 times this year, a sharp shift from September when they were split over doing it even 1 time. However, many prominent economists increasingly expect the Fed to now raise rates 4 times in 2022. What impact this has on housing and rates are yet to be seen. Powell has previously said that the Fed's initial goal was to return the economy and job market to pre-pandemic levels, when the unemployment rate had fallen to a 50-year low of 3.5%, and the proportion of Americans either working or looking for work was higher than it is now. But more recently, Powell has acknowledged that many of the people who stopped working or seeking jobs in the pandemic are unlikely to return anytime soon. Millions of older Americans retired earlier than they likely would have without COVID, and many people are foregoing jobs to avoid getting sick. That has left businesses chasing fewer workers to fill more than 10 million open jobs, a near record, and has forced them to rapidly increase hourly pay. Rising pay could fuel more spending, possibly pushing the prices of goods, services, and even housing even higher. Most banking experts had predicted mortgage rates to raise to 3.7% by the end of this year, but they are now saying we could even see low 4% by the beginning of 2023. If you have found this information helpful, do me a favor and make sure to subscribe to my channel and click that bell to get notified when I post more helpful content just like this. And if you have any questions related to finance, housing, or even wealth building, make sure to leave them in the comments below. See you next time on Delicious Taco Tuesday.